Hey there, it's Trisha, and I want to go over Friday, August 6th. I'll go over the setups from the NQ and both the ES. If you'd like more information on the setups, you can go to www.easyemintrade.com, and I will be going over the Kaboom setup in a webinar that I'm going to be doing on Thursday, August 19th, and that'll be at 8 p.m. Eastern, and you can also get the information on the website for that as well. Okay, so here's the NQ, and you had a setup occurring at 9:33, and you're above your moving average over here on your 3000 tick chart, and your indicator above zero and everything green, so you take it, and your target area would be this orange line above you, which is the low from the previous day. Depending on how you managed it, you were able to capture this whole entire move. If once you got your first target, you moved your stop to your entry, it held on by a quarter or half a point here on this pullback. So you were likely able to ride this whole move higher, again, depending on how you managed it. If you did not manage it that way, once you turn back to green here and your line is heading higher, you're breaking that low from the previous day right here on this bar, and that would be an opportunity for a re-entry, knowing that this dotted line above you, which is the Fibonacci 50% area, would likely be your next target. Likely, in most cases, you're going to pause there at least, if nothing else. So you pause there, and then it continues its next leg higher. So the next opportunity would be here where everything turns green again, meaning your line is already above green and it's heading higher, and your histogram starts to plot above zero again. And you just have to know that the area that you would likely stall or pause on that next leg higher would be the floor trader pivot point and the close of the previous day. So that would be your next target area, or the next area where you would expect that you would stall a little bit. If you chose to take this right when that was setting up right here, then maybe you got a point out of it. Notice that the slope on our moving average here is still heading higher, so you might want to wait. If you're willing to take something that's counter trend, expecting it to roll over, you might want to wait until that at least agrees with the direction you're looking to take, especially after that move higher. So you could wait for your moving average over here to kind of slope lower, and your moving average here to slope lower, and then take the next opportunity in, which would be here. Again, that's still counter trend, but that would make a little more sense than taking it while your moving averages are still sloping higher. You get an opportunity for an entry here, and your target area would be the 50% retracement area there. The time of that re-entry was at 10:19. This one here occurred at 10:08, so this one would have been the safer bet at 10:19. If you don't take counter trend trades, the next opportunity would have been right here, and you likely would have waited to get below the low of the previous day. And you'll see right here at 10:43, the histogram starts to increase in size after decreasing and almost disappearing. That's an opportunity to take a re-entry. You certainly could have taken it here when it went back to red, but you'd be taking it just above the 50% retracement area. And something that you might want to test for yourself is very often when your line is crossing below the zero on that very first attempt, it very often will work out. So that's something that you can test for yourself, and you could choose not to put any areas of support or resistance on your chart. It's up to you. I like to know where I might wind up stalling or bouncing or pulling back. So that's my preference. That does not have to be yours. And so if you took this short, no matter where you took it, if you decided to take it up here or down here, it worked out very nicely. And no real opportunity for a re-entry after this one. You do turn back to red here, but I just want to point out that you do have some divergence when you turn red here, meaning you've got lower lows here than here, while here on your MACD you're actually getting higher lows. So that would be divergence. Also, you have a little divergence here as well. on the stochastic. So usually that would lead you to believe that you would get a little bit of a bounce in the opposite direction, or a stall at least. And a little bounce could be 1 or 2 bars, but you don't want to take that right there on that re-entry. This is a buy that sets up at 11:10, and your line is crossing above zero, your histogram plotting green, and the issue with that is you would want to make sure you're above your moving average right here on your 3000 tick chart, and you do get above there, but you just would have to know that after this move lower, how high is this really going to bounce? You could wait once again until your slope of your moving average here and your moving average here change to show that it's sloping higher, or you could just choose to take it and try to get your first target. And either will very often work. It's totally up to you if you're willing to go against the trend and at least try to get your first target. On the ES, we had a setup occurring right here at 9:33, just about the same time as the NQ. We're above the moving average here on our 5100 tick chart. Your line gets above zero, histogram plotting above zero, you take it. The thing about this one is that you've got the low of the previous day right above you. That's where this orange line is. So you would just have to know that you might run into some difficulty moving higher if price gets stuck there. So you just have to be aware of it, and you have to either be willing to take it there where it's setting up, or you have to hope for an opportunity for a re-entry once it breaks out above there. And the thing about the the ES that you're going to find is that you don't get as many opportunities for re-entry like you do on the NQ. So, no place to really get in here unless you take that first entry. And once you get above the low of the previous day, you can see that the histogram does decrease a little bit in size, but usually I'd like to see it a little more than that. Almost disappear and then start, or even sometimes disappear and turn into the opposite color and then replot green in this case. And you don't really get that. So when it starts to increase in size, you can certainly have given that a shot once it broke above the low of the previous day, knowing that the Fibonacci 50%, this white dotted line, is right above your head. You start to turn green here, and you would not, they're barely visible, but you don't know that at the time. But what would make me not interested in this is that you've got divergence. You've got a higher high here than here, while here you've got a lower high here than here, and on the stochastic as well, lower high here than here. So that's going to lead you to believe that you're going to get a pullback of some kind. You get a short setting up here once you break the low of the previous day, and that is the perfect place to take it. You actually turn red here just above the low of the previous day, and you could certainly take it, and it worked out, but you would just know that the area below you might get stuck at, and you did have that move higher, so you would be taking it technically counter trend, and you would be right above the 55 moving average when taking that. But again, that's a personal choice that you'll have to decide for yourself. The better entry would be once you break this low of the previous day and this starts to increase in size. You can see what I was talking about when I mentioned here earlier about disappearing and starting to get larger. Here it almost disappears, and then it starts to get larger as you broke below that area. So that would be the better place to take an entry. No place to really jump on short after that, and for a lot of the same reasons that we pointed out on the NQ. You wind up with lower lows, while you're winding up with higher lows here and also here. So that's going to lead you to believe that you're going to have to sit through a bounce. See what I'm talking about? And a buy here, it would be exactly what I mentioned on the NQ. You would be buying it after this move lower. You would be best to wait to see if you have an opportunity once the slopes of your moving average here change to higher and here change to higher. And then you can look for an opportunity. And again, that's coming into lunchtime, so not sure anybody would be interested in that.